what's up everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, I just did a $100 deposit into my Average Joe Dividends portfolio, my taxable M1 stock brokerage account, and I split that into 5 different companies, so $20 into each company. And we're going to see what effect this will have on my future dividend income. We're also going to look back in the historicals on this portfolio as well, and I'll show you my holdings and also my current strategy. And the reason I invest into this Average Joe Dividends portfolio is for cash flow. This is a cash flowing portfolio. We can see the dividends that have been earned so far in the last year are $11,000, $259.74. So $11,259.74 total. We can see the return is at 27.68%, and right now the markets are still open, so this will be changing. We can see just the performance in this chart here over the last year. We've pretty much gone from $200,000 to over $260,000, and this is mostly because of these market gains and also these dividends. Of course, I've been doing deposits. Right now, the current strategy is to deposit $200 per week, and we're in the back half of the week, and this is why I do the stock picks. On the other videos I do on Mondays, I put the $100 into the account, and then it does the buying based upon my allocations. And I'll leave a link below so you can see what is all in this portfolio. And I'll just do a quick click here on the holdings tab, and I'll show you everything that's in the portfolio. And again, I'll leave a link below to what's in the portfolio. We can see SCHD is the largest position here, almost at $100,000. And I'll just scroll down here so you can see that most of these are household names of companies that we're all familiar with, like McDonald's and Aflac, Costco, things like that, Caterpillar, Pepsi, Home Depot, and the list goes on and on. And this is arranged by the largest position to the smallest position. We'll see what the smallest is right now, which is ADP at $784. We can see there's 52 positions. Here's my cost basis, and here's the current value of the portfolio. So let's go ahead and jump into the activity log. We'll see what these 5 buys were. You can see here's the deposit, and then here's the 5 buys. And then first up was Procter & Gamble for $20, and then AbbVie 2001. I had an extra penny, and then looks like Costco couldn't resolve one of the pennies, so Costco was the third pick. So Procter & Gamble, AbbVie, Costco, and then KKR, kind of a lesser known company, but it's performed quite well for me, over double my money with it. I know some people will criticize Costco. They'll say it's way too expensive, but I've heard the same thing for Costco in the past 4 years. It seems like there's never a good time to buy Costco, but when you hold Costco, it's never bad to be holding Costco stock. It just seems to keep going up, and they keep increasing that dividend. While it's not a high percentage dividend, there's always double-digit growth with Costco, as well as that special dividend that's paid out every 2 or 3 years. And then A.O. Smith, of course, they're famous for water heaters, but that stock's been doing quite well for me as well, with like 7% dividend increases. So we'll click done here, and we're going to jump over to my Google Docs spreadsheet. And we're going to find out here is what this did to my future dividends for these companies. What I've done is I've put in the current dividend. So Costco in 3 months, approximately November 10th, is going to pay me $2.92, but it's going to actually pay me a little bit more since I bought before the ex-dividend date. And then we had the $19.99. We're going to see how many pennies it's going to add to this. And same with A.O. Smith, Procter & Gamble will likely be over the $10 mark for the next dividend in November. Same with KKR. And you can see KKR, like I said, it's a lesser known company, but look at how the return has been for me. I've got like 2.5 times my initial investment. With that, the reason I said Starbucks was not just because it's next to KKR, but we're expecting a dividend increase from Starbucks. I thought it was going to be today. Maybe it's going to be tomorrow. We will see. We'll see if they do that 8%. I'm predicting more of a 4% dividend increase. So we'll see this 977 go up for their next dividend in November. And then AbbVie, they've already announced their next dividend. So they're going to be paying it November 16th. We're going to add to that $40.24 since their ex-dividend date has not come up yet. And also down here, the monthly cash flow average for the portfolio, we were above the $1,000 mark until SCHD announced that 75-cent dividend for the quarter, for third quarter. So it kind of lowered it for a little bit temporarily, but I suspect in Q4 we're going to go back to 80 cents or so. But we'll see. So we're going to see this 985 go up, and it's not going to be a huge increase. We're talking maybe like 20, 25 cents because the companies I chose to buy more shares in, or actually fractional shares, Costco has a 0.5% dividend currently, and then A.O. Smith's pretty low, 1.43. And then Procter & Gamble's kind of the middle, 2.32, but KKR is another one that's low, 0.53. And then the highest one is AbbVie. It's going to move the needle a little bit more at 3.24%. So we're going to go over to M1. We're going to grab some data, and what it's going to do is it's going to update the average share price, number of shares in my cost basis for those 5 positions where I bought the fractional shares. And I think somebody in a comment in my last video, they wanted to see like how much I'm buying with the $20 bought. I'll click on there. We'll get the details so you can see that. So with Procter & Gamble, I bought 0.11531. That was the quantity bought there. So even with these fractionals, I'm going to show you that it's going to make a little bit of a difference. In AbbVie, it bought a quantity of 0.10469. And in essence, what it's going to do when I import the data, it's just going to add these shares to it and also my average share price. And then here with Costco, Costco has such a high share price at $903.10 that I only bought 0.02214 of a share. But it will make a little bit of a difference with these fractionals. Then KKR, since they have a lower share price than Costco, it's going to be moving the needle a little bit more, a quantity of 0.15231 of a share. And then last up, A.O. Smith bought 0.22337 of a share. So just reading that out for the person who requested that, just kind of check and see. Maybe I'm not sure if you're checking the math or whatever it is, but just showing you those fractional shares. And it's going to, like I said, it's going to move the needle a little bit. We'll go back to the holdings here. I'm going to grab this data starting with the name column. And like I said, it's going to update the shares, the average price and cost basis of those 5 positions where I bought those fractional shares. And this is a quick and easy way of doing it. Instead of having to type in that data, I just do a copy and paste, and it's going to change that. We're going to see the next dividends change for these 5 positions, as well as the monthly, quarterly, and annual cash flow average of this portfolio. So we'll go back to the M1 data tab. I'm going to paste special this in here, values only, and it's going to change the shares, cost, and average. You can see right there. SCHD is not going to change because I didn't buy any more fractional shares. But if I scroll down, I'll find like AbbVie, it's going to actually change those here. It's going to change the shares, cost basis, and average for those very slightly. So go back to the dividend portfolio tab, and we can see here we've added 2 cents to Costco. So that dividend in November is going to be $2.94. And then with A.O. Smith, from $3.80 to $3.87, and I was right with Procter & Gamble, we went from $9.92 to $10.04. We're above that $10 mark, and it's gone to green. Any of the next dividends that are above $10 will be in green. And then KKR moved from 262 to 264. We'll see what AbbVie did. Then AbbVie went from 40.24 to 40.40. And we can see here, we move the needle just a little bit with going from 985.95 to 986.08. We're going to take that 986.08 over to this tab. In the event here, this is a $100 deposit. I'm going to copy this down and show the difference. So it added 13 cents of monthly income to the portfolio, and that's monthly income every month going forward. We can see here in red here with SCHD, the dividend decreased from 82 cents to 75 cents. What that did, so kind of move backwards temporarily with the 27.39, but we can go back and look at the good news though from SCHD. When we were at 61 cents going to the 82 cents, it pushed it way up. And so it increased my monthly income by 82.59. I've been thinking of just taking like the total for 2024 and averaging it, or just the total of it, and then divide it out and just get an average, and putting that over here instead of changing it every quarter and having it going seesawing up and down a little bit. And we'll see what I do, but you can see I've got the 75 cents right there for that. But going back to this sheet, even though we're at the 900s again, we're going to move back to the 1000s pretty quickly, probably in November. We'll see, maybe December at the very latest, because SCHD historically pays their largest dividend in December. So this is temporary. Let's move on to the dividend tracker tab. And on this tab, I track the portfolio by month, as well as the dividends paid, and then the quarterly dividends as well. You can see those, and I started tracking the quarter-on-quarter increases, and then the annual dividends you can see in the first year, $659, and then $2,800 in 2022, and then 2023 up to over $10,000. We'll see where we end up in 2024. We'll count up the dividends so far. So we're at 7,129.31 of dividends received so far. Also tracking that average monthly dividend. You can see we're at 1,630 at the end of August, back at 986, and we've made up for some of that $28 that it went down. We're down $20.22. We still have to make up, so we're down 2%. But a lot of it's going to go rebound back up with the dividend drip that's going to occur with the SCHD dividend. That's going to add over 10 shares at the current price of SCHD. So an additional, 750-ish if it's 75 cents for the next dividend in December, which I think the dividend is going to go up, and we're going to have slightly more than 10 shares. And then also BST, every time I drip this, it's over $3. It's like $3.25 adding to my monthly income, so that's also going to boost it as well. And then tomorrow is the 27th, and I'm going to receive a dividend when I wake up from Qualcomm. I'm going to get $6.95, and I'll put that in tomorrow morning. And then I'll add plus $6.95 because I keep like a running total. We can see the dividends received for every position. You can see like the dividends, how they've been growing for like SCHD. When I first started out, it was in 200, 600, in the 700s, 800s, and into the 900s. We're back into the high 8s. But I think we'll be well into the 900s again. And in 2025, I suspect we're going to be over $1,000 dividends for SCHD in the not too distant future, probably in June of 2025, that next dividend. So back to the dividend tracker tab, and we can see, the annual dividends were at 11,833, and we lost some of that annual income there, but it's temporary. And then there's my deposits so far. And you can see how much of gains we've made in the last year. Remember, it was like $60,000, and that's based off of $5,700 of deposits into the portfolio. So the vast majority of that is by market gains and dividends of that 60,000. So let's go on over to my total net worth statements, and these are all my assets. I don't count like my car or anything like that, collectibles, nothing like that. So I have a Vanguard account, I have an IRA, a Roth brokerage account, as well as a taxable brokerage account. You can see over here, I have $463 over there. And then here is my current employer. This is a Fidelity S&P 500. We're getting close to the $100,000 mark. So I'm just essentially buying the S&P from my current, my current 401k. That's all I'm doing right now is that, no bonds. And then here's prior employment to my current employer, which I've been with since 2020. And then you can see that IRA is at $680,000. Here's the dividend portfolio we just went over at length, of 263. And then at M1, I also have a savings account over there as well. And then Synchrony, this is like another emergency fund. And then this is like a 2-month expenses fund over here at Capital One. Here's my home value, but I do have a mortgage on it. Here's the current balance of my credit card, which I pay off every month and do not pay interest. And if you have credit card debt, I recommend just pay it off as quickly as possible. Even if you have to pause investing, I would pay off debt first. Then you can just snowball everything. Once you are debt free, you can just put everything towards your investments. And then here is my debt on the house, my mortgage below the 180 mark, but I still want to make this go away. I could, if I wanted to right now, sell this taxable brokerage account. I would have still a little bit of a tax penalty on that, but I do have cash to offset that. We'll see though. What I may do is wait until this exceeds the mortgage as well as what the taxes will be for that. I'll have to calculate that and just kind of have like a value of what it needs to be at so I can sell it, have enough proceeds for the taxes, and also pay this off. So I think that's going to be my plan right now. We can see here's my net worth over the $1.7 million mark. And here's how it's broken down by stocks, home equity, as well as cash. You can see here, this is my pre-tax, which is like 401k IRA. So I'm a 401k millionaire. And then here's after tax. So here's how I'm weighted. 61% is in things I can't touch, technically. And then 39% in after tax, which I call freedom. And here's how it's broken out into US and international. So that's pretty much all I had to show you guys for this video. Thanks for sticking to the end of the video. And the buys, nothing crazy here. Just building up, positions I already have, no new stocks. And I think 52 is plenty. That's what